Hi guys, good afternoon and welcome to Moneycontrol. I'm Karunya Rao and with me is Manisha Gupta joining us from the Mumbai newsroom. In the commodities chat today, we put the spotlight on agri-industrial commodities, and the first one on our list is rubber prices. Of course, Manisha, we've seen tire stocks react quite positively to the retreating in rubber prices. Talk to us about the levels where we're perched at right now.
Oh, well, yes, absolutely, Karunya. It has been actually on a declining spree, but currently we're trading on a two-year lows when it comes to rubber prices in the global markets there. We started this year quite strong at $158 per kg, and we are trading within that range of 117 to 144 on the lower side right now, which is a two-year lows, by the way. The pressure continues as the markets are looking at supply disruption still on. The demand from tire companies is not as strong, and you have Toyota being added into a long list of car manufacturers yet again saying that when it comes to Japan, they are looking at a lower guidance of unit production going forward in this year and the next as well, and that's clearly weighing onto the markets there. The other thing to watch is that for the global markets, we constantly continue to see higher production globally. This also is a peak arrival season. You are looking at more rubber coming in, not just in the Indian markets in Kerala, that is, but the other globally major producing countries also are looking at higher arrivals coming into the market. So it's quite. It's something that is not seen usually, that you have higher arrivals come into the market, but there is lesser buying coming in, and the arrivals are also not as much. So what's really happening is that the rubber growers are not bringing much rubber into the markets to be converted into latex. So that means that there is lesser arrival in the market, but because there is lower demand, there is pressure on the prices continuing.
So, not only is the demand muted, but even the supply
That's right.
is what you're saying is being regulated right now.
That's
Okay.
right. Yes. Yeah.
Okay. All right. So, does it augur well for tire companies and investors of tire stocks?
See, it would. If you look at the last year, we've seen good numbers coming in. The point being that globally, you are looking at the consumption gain up by 1.9% in the global markets, and the outview for the next year is at about 2.5, 2.8%. And that is on the lower side, really. For the Indian markets as well, the expectation is that last year you saw demand growth go up by around 2 to 2.5%. This year as well, we could be looking at around 2.5 to 3% of a demand growth, which again is on a steady side. What is not really working perhaps is on the export numbers. Last year was a great export year for tire companies. We saw almost a 55% of a jump. This year, the expectation is that even you would be looking at a double digit export numbers for tire exports. It's not going to be as high as last year. That's another thing that could be perhaps bothering the markets.
Okay, okay, understood. What about cotton, another important agri-industrial commodity, and cotton prices have also been on a bit of a downslide. 4 week low, is it?
Oh yes, 4 week lows and nearly 50% off from the kind of highs that we saw in this year itself. The cotton production has been on the higher side, the demand not so much. And for rubber and cotton, for both of these commodities, it really is about Chinese demand, which is not picking up. So the news that came in today that yes, China is going to be pushing in for more vaccinations is perhaps a positive, is the reason you've seen metals and crude oil, those kind of commodities do well today. But until that happens, and until we actually see the economic growth sustaining and not the kind of start and pause that we continue to see right now, it could be a bit of a botheration here. For cotton as well, the USDA says that they are looking at 1.5% of an increase in cotton production globally this time around. It's something that's weighing onto the prices.
Okay, and what about the end customers? What's in store for you and I in terms of prices that we pay for, cotton products, and even the companies that are users of the raw material? How does it pan out for them?
Last year the conversation was almost that with the kind of run up that we've seen in cotton prices, cotton could become a luxury and you'll have to go for blended texture
Yeah.
clothes right there. But with the 50% of prices, 50% off in case of price rise, I think it's again coming into the market scenario there. The expectation is that with the cotton prices having corrected, the textile mills, especially in India, have started to buy in. The capacity shutdowns that we were talking about when the cotton prices were hitting all-time highs also seems to be picking up. So whether it's Karnataka or Kerala for that matter, or many of those South Indian, East India mills, Gujarat mills for that matter, have all started
Right.
to come back now, also buying into cotton. So well, yes, it does look like that the textile as an industry seems to be coming back, getting alive and kicking yet again. With the lower cotton prices and arrivals being good, this is an industry which seems to be coming back yet again.
But is this cool off that we're seeing right now? Is it also the seasonality factor? Because right now we're at the onset of winter, and actually winter has settled in several parts of the country as we speak, and consumption typically does go down for cotton and demand thereby.
So for cotton, there are two things to look at. One, this is arrival season. Yes, prices have corrected from the highs. There's not so much demand from China, which is a major buyer. There's not even a demand from major producers to the global markets, which is Bangladesh and Vietnam, Pakistan for that matter.
Yeah.
I mean, these are the countries who are major guzzlers of cotton. This is where textile is created and sent to many of these consumer countries. There's not so much demand from those countries too. That is what is weighing onto the markets right now. But as we start getting back on for, and if we do not see that recession that everybody is talking about, there could be some
Mm.
support coming in for cotton. There's a lot of ifs and buts, but that's how the markets are looking at right now.
So right now, what are experts saying for both of these commodities? Any of them look attractive from a trading or investing standpoint now that they have dipped a fair bit?
Well, Karuna, when you look at both of these commodities, more people are more bullish on rubber at this point in time. They expect
Okay.
that maybe December could be yet another weak month when you look at rubber prices. But starting January, you will see demand coming back. You will see more rubber being created into latex. So this is going to be a good period. For the tire companies, the rubber prices from where they are right now could be a good news slightly for a longer period of time. But it is going to be rubber and auto manufacturers, tire makers. That is where the market is putting more money at.
Okay, well, great. Thanks for getting us that update. Natural rubber prices, 2 year lows, cotton also at a 4 week low. So something that you can look at if you've been interested in buying and investing in either of these commodities right now. Thank you so much for tuning in.